Hello and welcome back to Investing for Generations, your channel for high quality stock research for long-term value investors. And today I want to talk about the delay of the USPS contract decision, and Workhorse with that is just dropping yesterday by over 10%. And I want to talk about this topic and also want to look what one of the biggest YouTuber on Workhorse think about that. And this is Jack Spencer Investing. Maybe when you click on this video, you also know Jack Spencer. He's really, first of all, a very nice guy and very entertaining guy. So I highly recommend his videos just because of that. He's not a financial advisor, as he say all the time. When you look his videos, I think it is very clear he's not, as I am also not. He's very deep into this workhorse theme and had some interviews also with his CFO, and he really dived deep into this company. And so I want to go through his opinions on the delayed contract. And first of all, I want to say, and I absolutely online with him on that, that we don't have really a delay because nobody really said ever that the contract will be announced on October 13th. So at this point, I'm totally with Jack Spencer about that. But then he has also some other points in his video, and I want to go through this and just give my opinion on that. And then also come to a conclusion if Workhorse is a good investment or not, in my opinion.
I find it very hard to decide what I think is happening today, in all honesty. But I do find this crazy. I mean, if you are an analyst, how are you going to change your price target in a span of, 3 days? And this price target of $27 from Roth Capital, it doesn't give us a time frame. It doesn't tell us if that's short term, if it's medium term, if it's long term, if it's for next week, or it's just from 3 years. And how can we respect what they have to say if they are going to change it every 3 days?
So what he's talking here is about the Roth Capital downgrade Workhorse just yesterday to neutral. And this is really something crazy because Roth Capital just upgraded Workhorse last week to 33 or to a target of $33, and just a few days later, just because the contract, the USPS contract is delayed, they downgrade again to now a target of $27, unless I think all of these price targets are just worthless, because as Jack Spencer also said, about what time span we talk here. Normally the analysts talk about a time span of 12 months, but who knows, unless the price targets are worthless at all, at my view. This is really crazy, and to change the mind just over the weekend brings me to another point. When I analyze my businesses, my stocks, I take a short look at the analysts, but really I don't put too much into it because it's just really worthless. The analysts, in my experiences, and this is not just for Workhorse, this is in general, they just upgrade when the market goes up and they downgrade when the market goes down, and all of these analyst price targets have nothing to do with the business behind the stock. And that's all about here on this channel. I talk about the businesses, and the stock price of course tells me when to buy, but nothing changes when the stock price goes up and down. So I'm focused on the business, the analysts are focused on the stock price, and that's just crazy. And as I said, normally they talk about the time span of 12 months, and this is also not what I think about. My time spans are for longer term, and in the best case scenario when I got a really great business forever. My point here is, and this is maybe just one more example of that, don't give too much attention to the analysts.
I'm not selling. I have no intentions of selling. I'll see what happens the rest of the day, you know what I mean? $20 is becoming a possibility if things don't get better. I am close to buying, in all honesty, considering that fundamentals have only gotten better. If everything that we expect to happen happens, this is going to be a fantastic price point. But of course, if those things don't happen, it's more than likely going to go down in value. That's the way it's always been with Workhorse from day one. And now, if the USPS contract is going to be pushed back, who knows, November, December, whenever it is, yeah, it's going to be a little bit weird. We're probably going to slow down. We're probably going to trade like a normal company, a normal stock for a while. And that's not what people will be used to at Workhorse either. But just understand, guys. I mean, watch yesterday's video. So much good came yesterday. Nothing bad came out today except for Roth Capital.
And I totally disagree on that. As I mentioned also in my other videos about Workhorse and tried to explain, I think Workhorse is a very high risk investment. I think there is a big gap between risk and reward. I explained that also in my other videos, and then I found an article on Seeking Alpha from yesterday. Also, this was before it was clear that the USPS contract wasn't announced yesterday, and I want to go through some points here. First of all, I want to go through the points on the contract, or the view of the author on the contract. And he said, odds are not stacked in favor of Workhorse, but the counter argument would be that Workhorse is the only company offering to design a purely electric vehicle that would help the Postal Service achieve its sustainable goals. Workhorse's strength, in my opinion, is the cost saving its vehicle would offer to the Postal Service. As a pure battery-powered electric vehicle manufacturer, Workhorse stands in a good position to address this problem. In its investor presentation for 2020, Workhorse published an illustration of the total cost of vehicle ownership, which highlights the savings associated with its trucks and electric vehicles in general. And this seems really a lot, and so of course this is a plus point for Workhorse. I believe there is a possibility of Workhorse ending up with a partial contract, which is a best case scenario for the company and investors. As to being awarded the entire contract worth multi-billion dollars, the chances are quite slim. So I totally agree here. As I mentioned also in my other videos, for me it would be very, very unlikely if Workhorse get the whole contract. This would be a really surprise to me, but I think all the traders or all the unexperienced money in Workhorse right now just expect that they get the full contract, which is really, really unlikely. And I think this is also because yesterday the stock dropped so much because the expectation was so super high, and just because we have a delay, which is not really a delay even, take place, we got this drop in the stock. And further, the author here just give an overall look on Workhorse. Workhorse is a loss-making venture that has failed to gain traction despite being in the market for over a decade. Even as the popularity of electric vehicles boomed in the last few years, Workhorse was moving at a snail's speed in developing its technical capabilities to address the demand for EVs. As its financials exhibit, the company has gone nowhere in the last decade except piling up debt that could soon threaten the survival of the company. If Workhorse gets a small order from the USPS, this would only lead to further distress from a financial perspective, as the company would have to raise additional funds to build the necessary infrastructure to keep up the pace with the deadlines set by the Postal Service. Workhorse is currently bleeding cash, and I do not see this changing for the better even if the company delivers a few dozen vehicles to the USPS. I somehow also agree on that. The fact is, Workhorse until now just burning cash every year, every quarter, every month. This is always the same with the fast growing stocks and businesses. So that alone is not a no-go, but Workhorse, and this is also a big point for me, and we come here in this article to that also. The problem for Workhorse, in my view, is the market is limited. The market of the last mile delivery is limited, and even in the best case scenario, the almost 3 billion market capitalization right now seems very, very, very expensive. The competition is catching up as well, while Workhorse promises to capture the 18 billion last mile delivery vehicle industry. The leading vehicle manufacturers have already laid the groundwork. And then we found just a list of big players in the automotive market, which will also take a look at these markets with their vehicles. This is also a point I mentioned in my last video about Workhorse. The last mile delivery vehicle market will soon be flogged. That's what I'm also very sure about if there is really a lot of money to make. And then I will close with this because this is also my view on it. Odds are certainly stacked against Workhorse to win their entire contract of more than 8 billion. However, I'm not ruling out the possibility of Workhorse securing a partial contract. I'm totally with that. I think this will happen. At least I think this is the most likely scenario. And with this scenario, I want to go back to an article I mentioned in my other video about Workhorse before. And this is just the limited niche in the sector of the last mile delivery. I just want to go through this short text with you again, just in case you didn't see my other videos. Given that the last mile delivery market is an oligopoly and that all of the major players will electrify sooner rather than later, it is quite likely that nearly 100% of the 350,000 delivery van market in the US is electric by 2030. I think this is very optimistic, but okay, whatever. If Workhorse naps just 10% of that market at 75,000 average prices and 15% operating margins, then my modeling suggests that net profit should round out to 300 million by 2030. A 20 times multiply on that implies a potential future valuation of 6 billion, more than double today's market cap of 2.7 billion. But let's say Workhorse naps 20% market share, then we are talking 600 million in 2030 net profits and a future valuation of 12 billion, up more than fourfold from the WKHS stock price today. Either way, there's still plenty of fuel in the tank. So it seems like even in the best case scenario, in a 10-year span, the valuation could go up to 12 billion, which would be 4 times the money right now. But this would be a return of 16.5% per year. And of course, 16.5% per year is a lot. And if you compound this over the time, of course, this is a great investment. But this is really the best case scenario. And for me, it's very, very unlikely this will happen. And so we have on the one side a very limited return, and on the other side, a high risk because the future, not just of the USPS contract, but of the whole company, is very uncertain. And because there is this so bad risk and reward ratio between the upside, possible upside, and the downside, it's still absolutely no-go to invest in Workhorse. It's just still a gamble. Of course, on the short run, as a trader, you can make a lot of money with that with a high volatility in both directions. But for a long-term value investor like me, it's absolutely not mine. And so I will stay away from Workhorse. So that's it for today. If you like the video, subscribe to my channel and join this community of long-term value investors. So thanks for watching. If you like the video, give me a big thumbs up, and if you really like the video, subscribe to the channel and tell all your friends that here is a big community of long-term value investors are rising. See you then. Take care. Bye bye.